I'm Brenda Butner, and this is Bulls and Bears, a special delivery from Uncle Sam. And it's early. Millions of tax rebates start hitting bank accounts this Monday. Will all that cash for Main Street deliver a new bull market on Wall Street? Let's find out in the trading pit. And here they are, the Bulls and Bears this week. We've got Gary B. Smith, Tobin Smith, Pat Dorsey, Scott Blyer, along with Peter Schiff, who is the author of the book Crash Proof. Welcome to everybody. Okay, Gary B. started off those stimulus checks. Are they enough to bring on the Bulls?
Well, I'll tell you what, Brenda, I think it's just going to be a continuation of what I think of the bull market that started back in mid-March. Look, you're taking 1% of the GDP, essentially, about 150, $160 billion. And even if you make the claim that you're moving it from 09 into 08, it's certainly going to pump up the economy in 08. People are going to go out and spend, that money. They might just pay bills or they buy coffee, whatever. They might not even spend all of it. But even if they spend half of it, it's going to have a significant boost. And I think it's really going to move the stock market up even further. Well,
but Toby, they do have to spend, and you don't even think 50% will do that much spending.
Well,
huh?
our research shows that probably only 30% of the money actually goes into buying stuff, number one. But remember, it's $150 billion, but it's going to the people who really don't pay taxes. 5% of the people in the United States account for about 70%, 10% account for about 70% of all taxes, right? They also are the most of the discretionary spenders. So you're putting in the hands of people who need the cash the most, and maybe they're going to buy gasoline, and maybe they're going to buy food, but that doesn't make the economy stimulate. What the economy and what the market is seeing is 2009, and they're seeing a very low bar for earnings. They're seeing an expansion, and that's what's making the market up. This thing, to me is...
So we don't even need it. Scott, what do you say?
Well, listen, those people, sure, they need the money because over the past couple of months, the economy's lost over $100 billion in retail sales. They've lost over $100 billion in increased gas prices.
March sales were actually flat, Scott. March retail sales were actually flat.
Going up to that. But now all of that money is going to go to keep things the way they are. Fill up your tank.
Because of inflation, because food.
Because prices have soared. All that money is just going to keep the economy where it is. But the bottom line is the stock market is going to do what Tobin's talking about. Look out to 2009. With or without these stimulus checks, the market is looking towards a better economy and back to normalcy next year.
Well, Peter, I know you're a really big fan of this.
No, I mean, first of all, why do you think we have so much inflation? It's because the Federal Reserve has to print money to keep the stimulus checks from bouncing. Hopefully what happens is Americans have the good sense to do the opposite of what the government is doing and pay back their debts that they already have. We don't need more spending. That's how we got into this mess. We borrowed money that we didn't have, and we spent it on things we didn't need and we didn't make.
God, I finally agree with Peter Schiff. You're right. They are going to pay their debts back.
And in fact, actually, it's our money that we're spending, Pat, isn't it?
Yeah, that's kind of the interesting. Really, you're just sort of borrowing from 09 and bringing it into 08, as people have already pointed out. I do think this is really just going to be a drop in the bucket. If you talk to retailers and restaurants, and a bunch of restaurants have come out with earnings in the past week or so, what they're saying is that, ex-California and Florida, which are big states, granted, the picture is actually not all that ugly. Now, that's a two-edged sword. On the one hand, it means the rest of the country is actually, not in the consumer Armageddon the market thinks it is. But on the other hand, it means that falling real estate prices do have a pretty big negative impact on consumer spending. So things stay ugly in real estate in the rest of the country. They could stay ugly in consumer land for a while longer.
But, Brenda, a lot of the retail stocks have already rallied in anticipation of that. So it's not going to help these stocks any further than what we've had over the past 6 weeks.
And remember, too, all we get is the margin, right? All the stuff that we're selling in these retailers are imported. We're just running up the trade deficit. If we stimulate any economy, we're stimulating the Chinese economy. Well, when Americans take the money that the Fed printed to the store and they buy something, the stuff wasn't made here. We just make the margin on selling it, but the real money goes to the people who produce it.
We are a global economy, though.
But actually, Gary B., the person who gets that dollar goes and spends it. It's that whole multiplier effect.
Exactly. And the other thing, Brenda, is I don't think the coffee at Starbucks is made in China. But, look, maybe, who knows? I guess it's in Kenya. But not every good and service we have here, Peter, is made in China. And the fact of the matter is, look, that money, even if, per what Pat and I were saying, even if it is moved from 09, it's not a drop in the bucket. You know, Toby said, oh, they're just going to spend it on gasoline and food.
But remember,
so what?
What
it's
about
gasoline
the cost
and food that they weren't going to have the money to spend on before. And the people that sell the gasoline and food, as Brenda points out, they're going to spend it on other things. So yes, it's got to be stimulus.
All right.
What about the cost of providing the money? When they print money, there's a cost associated. Prices are rising because the Fed is printing too much money.
If this is
the point
this is a really good idea, then why didn't we do $500 billion? I mean, that's why I'm a little confused.
We may well do that. Okay, Pat, go ahead.
I was just going to point out that Scott's point about a lot of these stocks already discounting this is a very good one. I mean, if you look back at the rebate that happened in 2001, a lot of it was spent actually on restaurants, not on goods. And if you look at a lot of restaurant stocks right now, many have rallied 60 and 70% from their January lows. So I would say any stimulus, price it.
Well, in New York, you're going to take that check, put it on the bar, and say, you know, give me an hors d'oeuvre and a cocktail. I'm in.
I qualify for this.
South Frisco.
Not everybody lives in New York. All right, Peter, do you have anything positive to say about this at all?
About the stimulus checks? No, not at all. It's just going to stimulate more inflation, and it's another reason to get out of the dollar, to buy more gold, to get your money off these.
Let me ask you about Wall Street then, because actually the market was up last week for all the major market averages, with oil at near 120
I don't think it has
bucks.
anything to do with the stimulus checks. I mean, you know, we had a big drop. I mean, you have some shorts who are covering. People are getting optimistic now. They think the dollar is bottom. They think our problems are behind us. They're not. The bulk of the problems are still in front of us. We're still in a bear market, and these stimulus checks aren't going to change it. Who's laughing?
Okay, well, you know.
I am. At you.
All right, well, now that we feel very cheerful, we can go on to our next session.
I've never made a bad call, Peter. All right, excellent job.
Thank you. All right, that does it for the Trading Pit this week. Coming up, sell in May and go away. Our gang says stocks to buy in May that are set to go all the way in the stock exchange. All right, Gary B., what should we be buying in May?
Brenda, it's an old Scottish company, McDonald's, which I really love. I stole that right from Toby. He could probably do that better. But we'll take a look at the chart. I know he couldn't do this better. I'll tell you what, this is what you want a long-term buy to look like. Look, it had that gigantic trough from 2000 to about middle of 03. It just broke out. It pulled back, tested support. This stock could easily double in the next few years.
Pat, it's up like 30% in the last year. It's pretty expensive, isn't it?
I was going to say, leave it to Gary to pick the only restaurant right now that is not cheap. I'm not a fan.
Are you a bull or bear?
No, I'm a bear on this because of that exact chart. It's done too well, and there's a ton of smaller restaurants that have not moved.
Toby, what do you think?
McDonald's is a story on Europe and Asia, and actually I do agree with him for a very, very short period of time. I've got another 6 months it rolls.
All right, there we go. Pat, what about your stock?
Fuel Tech, this is a company I recommended probably about a year ago at a slightly higher price than it is right now. So wonderful little business. We actually met with management earlier this week that has some proprietary technologies that make coal plants both more efficient and cleaner. They are selling into China right now, which is going to be an amazing growth story for them. It's a smaller firm. They've been under attack by shorts lately, but they're the real deal, and I think the stock is possibly a double from here.
Ooh, a double. What do you think, Toby?
Well, you know, when Patrick first recommended it, we started looking at the company, and I, of course, recommended it a little higher than that. So, A, I think he's right, and B, it's a lumpy company. So you want to actually buy them, I think, when they have a bad earnings report, because ultimately they spring back.
Okay, it's lumpy. Do you think so, Scott?
I would be a buyer of the stock as well. I think in the next couple of years, this alternative energy wave is going to take these stocks much, much higher. This will be one of them.
So
Peter, how about you?
Well, I think he's on the right track. It's not a bad idea, but I would like to buy it a little bit cheaper. I think, it's a little bit of expensive stock, so I'd try to buy it and pull back, but I'm not. It's all right.
All right. Tobin, how about you?
Likes an American company?
The company is Zolt. Now, Zolt makes those gigantic, arms for the wind power, right? Now, wind power has been sort of flat because we haven't got the Senate together and the House to get this package for the tax credit. It's coming out. No matter who the president is, this wins. And these guys are selling to GE, Ventus, all the big players. I think it's back to $40. Management has finally solved their problem.
Scott, you like it?
I am bullish. You absolutely buy the stock now.
Woo. Gary B., how about you?
I'm in the bull camp. It made a great move Thursday. It has upward momentum. I think it's going a lot
Now
higher.
they just need to make money, Toby.
All right. And Peter?
Well, apparently it's got
that?
about 80% of its sales come from abroad. But again, I think there's better ways to play the global economy. I think these stocks are expensive, so it's okay, but I wouldn't rush out and buy it.
It's okay. You know, that is
damn
a
thing.
really...
Another it's okay.
That's
better
major
stocks.
praise
Have you watched
from
the
Peter.
show, Schiff?
All
Come
right.
on. It's
Okay.
yes or no.
Better ways to
Scott,
Now-
your stock.
I like a company called Himax Technology. It's a tiny little Taiwanese semiconductor company that makes chips for flat panel displays. Now, I don't know if you know this, but a lot of them are made in Taiwan. And this company is selling at 7 times earnings. It has a 4% yield. And China and Taiwan are getting much more friendly. So the discount Taiwanese stocks have had is about to go out the window. I think this is a double.
Scott loves flat panels.
Oh, yeah.
Gary B., do you?
Well, I think it's gone flat line.
That's when you
do
buy it.
anything. I want to buy it when it makes some kind of move up or down. I'd avoid this.
You buy it now.
Okay, are you going to damn with faint praise here, Peter?
This is of all the stocks, this is the best one. I like this stock. It's the kind of stock I buy for my clients. I might even buy the stock myself. I don't own it now.
Whoa!
Oh, no.
All right.
Oh, please.
Now, Pat, what do you think?
I would run far away. Half their sales go to just one company, which is also a 10% owner. That's far too much confidence.
Now I like it even more.
Okay. All right, and finally, Peter, your stock.
Well, look, I came up with Penn West Energy Trust. You know, this was one of the natural gas companies. The Natural Gas Canadian Trust got clobbered when natural gas prices were low. This stock got cheap, and when it was, it picked up a couple of its competitors. Very cheap, I know, because I owned one of them. I think it's a $40 stock. It's about $30 now. It's got a 13% yield. So I think within a year, you can make about 50% on it.
Gary B., do you agree?
I don't. I think stock has momentum. Unfortunately, that momentum's to the downside. So
All
I
right.
think it has a lot further
Take a
to
look
drop.
at the chart.
Okay, how about you, Pat?
One of their acquisitions I was not a fan of. Kinetic added some very mediocre and unfocused assets to their mix, I think. And at the end of the day, this is basically an oil play. And if you want to play higher oil prices, I think you just buy the crude ETF.
And Toby?
Well, I want to pull it back. It is more oil now than natural gas. And the big issue here is that they've had horrible cost in finding that additional oil. Once they get that squared away, now you're probably a $35 stock. Have it pull under 30.
All right. Thanks, guys. And coming up, fed up with paying up at the grocery store? Well, someone here has an easy fix. Food rationing in America, both Costco and Sam's Club limiting the amount of rice that customers can buy. All this while America's donating over $2 billion worth of food a year to countries overseas. So is it time to stop giving and start keeping more food for ourselves? Gary B., what do you think of this idea?
Absolutely, Brenda. Look, this $2 billion talking about is a program that we started back in the 50s called Food for Peace. One, that's broken, corrupt, and doesn't work anyway. It damages the local economies we give the food to. Second, you know what they say about charity begins right at home. And right here, where people are struggling, even though the $2 billion had an incremental impact on prices, it's certainly going to reduce prices. And three, food charities, I read just the other day in the Wall Street Journal, are strapped for food. So it's time to end this and just keep the $2 billion worth of food here.
Well, Scott, is it really the hungry people overseas that we should be hurting, or is it the rich farmers here at home? I mean, what's the cause of this problem?
First of all, Gary, grow a heart! Second of all,
for the people here.
Second of all, you can't stop being charitable with our food. We've got the bounty of the world here. But listen, there's a farm bill that's in Congress right now, $285 billion. A good portion of that is farm subsidies. Stop paying farmers. Let the government save money. They should give away more food to people who really need it instead of subsidizing farmers when food costs are through the roof. Look, when our farmers are hurting and prices are low, we should help them with subsidies, but not now. They just don't need it.
And that's paying them basically not to grow.
That's right.
Well, it's somewhat insane for us to ship food to other parts of the world where we need it here. I mean, that just doesn't make any sense.
We
Number
need
one.
it here. Go walk into a supermarket, Toby.
But the other side of it is that the food subsidies, if you take them out, but the benefit is now you're going to start to compete and people are going to grow more food, which is going to bring the prices down. And number three, there's a big issue about water here, is that, you know, the other thing as we go through this is that listen, we need to keep our food because it makes better sense. If we're going to give it away, let's give it away to our people, not to everybody else.
Well, Gary B., and actually nations overseas are being very protectionist. You have India cutting off rice exports, Brazil doing the same.
Yeah, exactly. Yeah. And the food where we do give it to in some countries, the officials over in those countries said, hey, look, the farmers here could grow food. They could grow enough food, but why should they do it when we're getting free food from the U.S.?
Yeah.
So
let's
stop growing corn for ethanol. Stop growing corn for ethanol.
And if you're going to have the welfare, Scott, at least have it go to the people here.
Well, let's teach them how to.
There's food stamps here. Yeah. There's a lot of things here.
We are a bountiful nation.
We're the richest nation in the world. I mean, Peter Schiff might disagree with me, but listen, you can't stop giving to those in need. We still have way too much to ever stop doing that.
All right, an interesting debate. Thanks so much, guys. So the smart monies tried to get into this one investment for 2 decades, but it couldn't. Now we know how you can. Find out all about this moneymaker right here on Bulls and Bears. Predictions. Gary B., you're up first again.
3 words, Brenda. Gold is dead. You know, I said it was dead when it was 20% higher. It's going to be even deader in months to come. And the reason is the Fed is going to be on inflation watch second half of this year. So it's going to drop by DZZ. It's an ultra short of gold, and you can make money as it's going
down. That means it's a leveraged debt against gold. Yeah, no, he is laughing. All right, Peter, go ahead.
Look, you like the golden arches in the B block. You should have stuck with gold there. You know, this is one of the worst picks you could probably make. The Fed is not on inflation watch. They're creating inflation.
All right.
Gold's going to go through the roof.
You said it
right.
You better have a stop in on this
when it was 20% higher, it continues to go down.
No, you like it, Scott?
I do like it. I think the crisis has passed, and because the crisis has passed, gold has seen its top maybe for many, many years.
All right, Toby, your pick.
All right, we were talking about the food shortages, but really what the food shortage, one of the biggest drivers is not oil, it's water. You know, 75% of the water in China is used for crops, and a huge amount of that is polluted. So you look at a company like Veolia, which now has international business in water all throughout. You're not going to get huge return, but I'll tell you, this stock is going to be up 40-50% over the next year.
All right, Pat, it's on waste and wastewater. What do you think of Toby's pick here?
This is a wonderful business. I'm not sure it's going to make that kind of a move in a year. It's kind of a slow grower, but it's a very, very good business that in an industry that's tough to get into.
Gary B., quickly, do you like it?
It has a lot of potential. Yes, I do like it. It's not a trading stock. It's an investing stock because it jumps around.
Aside from the fact it's French.
All right. Okay. Pat, your prediction.
The Sequoia Fund, which has been closed for 25 years. This is the fund that when Buffett shut down his partnership in '71, he told his investors to go with these guys. So it's a pretty good stamp of approval. They're reopening for the first time in 25 years on May 1st. They're going to have a whopping 1% expense ratio, so you're not paying a lot for the privilege. And they've beaten the market by 4% on average for 35 years.
That is that investment you can finally get into. Peter, quickly.
Now, I'd stay away from it. If you want to buy Warren Buffett, just buy Berkshire Hathaway and save the 1%.
Because it is a very concentrated fund.
25% of it is Berkshire Hathaway.
Okay, Scott, your prediction.
Forget about Microsoft Yahoo. The real action is in these rooms all around the world that broadband and broadcast the internet. They're called colocation rooms, but they're these secret little rooms in warehouses all around the world. Equinix, which Toby called Equistinx just a month and a half ago. Savis is their competitor.
There we go. Okay.
Savis up 30%, up 50% this year.
Do you like it, Toby?
I actually do like this business, and I was wrong on Equistinx.
Big competitors, though, AT&T and IBM. Yeah. Okay, finally, Peter, your prediction, quickly.
Well, you know, food prices are rising, energy prices are rising. Next, you're going to see surging apparel prices. It's all because of the inflation the Fed is creating.
Retailers.
Retailers are in trouble.
Short
them. The American consumer is finally tapped out.
Way to go, Brent. Somebody actually made a statement here. That's fantastic.
Okay, well, I don't know. Okay.
SCC is a fund that's twice.
Toby, what do you think?
It's too late. It's too late. I mean, the move has already come down.
Quickly, you got 5 seconds.
25% of this is like Walmart and McDonald's, which are not very discretionary.
Fund. I thought he hated those. All right, Cavuto on business. Neil, take it away.